Expedia just recently reported their earnings, and they definitely took it on the chin as the stock collapsed from the 118 level to as low as 98 before recovering on Friday. Let's get into the specifics as to why the stock collapsed this past week. So this article is coming from Investopedia.com. Expedia shares sink as its sales, bookings, and outlooks come up short. So the shares plummeted 16% on Thursday after the online travel site reported sales and bookings that missed forecasts. They also gave weaker than expected guidance. The CEO, Peter Kern, argued travel demand remained strong in the period, and the company was pleased with the progress of its tech transformation. Because of its success, he said, Expedia accelerated its stock buyback program to a record $1.2 billion so far this year. Now, Expedia predicted gross bookings in the third quarter, which is typically the best measure for a travel industry, will grow by a high single-digit percentage, and revenue will post a modest sequential acceleration. Those were less than analyst forecasts as well. Now, before we get back to the analysis, let's look at this video where the CEO talks about their quarter.
From the market justified about the growth trajectory of your company?
No, absolutely not. I mean, we basically delivered what we told the market we were going to deliver, and in the quarter, just past the quarter, we launched our new big rewards program. We've made huge technical advancements, and we reaffirmed our yearly guidance. So, not sure what the market was looking for. Maybe they're looking for concerns about the consumer, but basically we were on our plan and really excited about the back half of the year. So we were, other than the chart you have behind me, we're very excited about where we are.
So Peter, what's the story? How do you see this travel season having played out, and what are your signs into the rest of the year about bookings and the health of the consumer? Because it is what the street wants to know about, as you note.
Yeah, absolutely. No, I mean, when we look ahead, our pacings for the year are up versus last year and prior periods, all prior periods basically. We've had, very good, there's been very high interest in international travel. What you've seen is the travelers moving around a bit, so you see pockets that might be retreating a little bit, but other pockets advancing. So Asia's very strong, Latin America's very strong. The West, U.S., North America, and Western Europe, have slowed somewhat, but they've been stable. So basically, customers are moving around. Cities are very popular. International cities are very popular. International travel has definitely eclipsed domestic in the rebound. Again, it's sort of this COVID unroll that we've seen again and again. People go where the next thing opens up or where they haven't been able to go. So domestic was very big. Then international got big. Now Asia's coming up because Asia's opening up. So we see it in waves, and as we look out, the consumer is very strong in travel. Demand remains high. There's not much evidence of really at all of ADRs, pricing dropping. Yes, you can find that domestic air in North America, the prices have come down a little, but in international air, they're still very elevated. And international hotel generally has been very stable in ADRs. So there really isn't much evidence of a consumer lapse here in any way.
Peter, you're joining us from London. In fact, you're sitting in the chair that I used to sit in when I was at QBS, based out of that studio. It's a nice chair. Is there a sort of differentiation between the health in different markets of a London consumer, a European consumer, and what we're seeing here in the United States?
Well, I think, again, you're seeing, first of all, there's a lot of people from the United States in London right now. Europe has been a popular destination for North American travelers this summer because last summer they weren't traveling as much internationally. So now every city in Europe is full of Americans, and likewise, European travelers are traveling to other international cities. So you're seeing a lot of that, but the health of the consumer is strong. We still haven't really seen it, even at the lower ends. It doesn't mean there isn't, you can't find a pocket of a city or a destination that's slightly lower. For example, mountain destinations, beach destinations are slightly less popular this year in favor of big international cities, but it doesn't mean the travelers less willing to travel or spend. It just means they're moving their dollars around, and that creates small pockets that might, where you might see some reduced interest, but that's from super high elevated interest across most of these markets. So this is, a slight taming in a few spots and strength in other spots that make up for it.
You've been doing some investment in technological streamlining behind the scenes with a sort of loyalty and rewards program. How do you see that driving your business in the near term, but also longer term as well?
Yeah, it's a huge investment for us. I mean, first of all, we've invested over the last few years in a huge technological transformation to bring all our stacks together, all our brands together on one technology so we could go faster, innovate faster for the consumer. And really our new loyalty rollout of One Key is a great example of all of that coming together, where now our big 3 brands will be under one loyalty program. So Expedia, Hotels.com, and Vrbo. People can earn rewards, which is basically like money, spend it on any product they want across all of those brands. And it's the culmination of a bunch of work that's been going on for more than 2 years to really change our future. And our idea is a simple one, which is we want to build the best products that consumers are loyal to, get them into our loyalty plans, get them into our app where they can have the best experience, see the most discounts, the most rewards for their travel, and that will create a sticky relationship with our consumers, and they'll come back direct to us. And we've seen it again and again in every industry. We think there's huge opportunity for innovation in travel, and we think we're doing the most with technology, with AI and machine learning to personalize, and all of those pieces to really create the next step forward. We invented the category, and we're trying to reinvent the category for the next, decade or two with new product, better consumer proposition, and really a much stickier, less just transactional kind of product that travel used to be.
So bear with me on this one, but in Meta's earnings, we saw evidence that AI recommendations boosted their ad sales, as an example. Give me some tangible examples of how artificial intelligence aids the consumer on your platform, but also just helps you guys make more money.
Yeah, so we use it really everywhere we can, and that doesn't mean everywhere yet, but throughout the product, from everything from optimizing the pictures you see. You might be traveling with a family or kids, and we'll show you pools, or maybe you're traveling by yourself or a couple, and we might show you bars or rooms or other things. Like, we optimize that. We optimize how you search. We use machine learning to better move the pieces around the page so you're seeing the things that are most relevant to you most easily, or to simplify how you shop. So you might know that some rooms are called a queen size superior, or some rooms are called a king size something city view. We've done all the work to compare all those things so that you can easily see them side by side and understand, using AI and ML, understand what the options really mean and what the differences are. So we're using it in all kinds of simple and elevated ways. We've also put ChatGPT into our iOS app. We just launched it in our Android app. So we're giving people that utility if they want to use it for discovery, and then we save products that they've looked at and they can go compare them later. So there's lots of places we use it, but some of them are quite simple and straightforward, personalized search and other things, and some of them are the latest large language models and all of those opportunities that are still ahead of us.
So the question is, has the downfall after... So the question is the collapse after earnings over? Let's get into the charts. I'm going to start with the monthly chart, and we see a somewhat of a floor. I like to call this the football field. One end zone at say $90, and the other end zone we're going to put at 120. And in the middle you have the 50-yard line, about where price is currently located. So as I mentioned, I'm looking for further declines in Coinbase as price continues to respect the short-term daily down trend line, and this coincides with Bitcoin, which is again just hovering and range bound between 25 and 32K. However, price is steadily approaching a great buy to go long if and when price gets down to the daily bias level at $78. Look to take price back up, first target being the round hole psychological number of $100. And what I love about this level is that it's right below some previous highs that we had back in February and then again in March. So this is a great level to go long. Also, this zone is right below the spike in price. So this is a great level to go long. One last note, we do see the 50-day moving average now entering the zone, roughly 50% in that zone. That's going to also serve as a dynamic support. In addition, we have the 100-day simple moving average also kind of approaching that zone. So again, great opportunity to go long if and when price gets down to the daily bias level at 78. Thanks for watching. Subscribe. Please like the video.